Brexit agreement, Italian disciplinary, Trump meeting. Good morning and welcome to this week's Rational Thinking, whereby I'll be covering the main talking points which have been impacting the currency markets over the past week. So over the past 6 months, the sterling to US dollar exchange rate has been very much determined by the positivity around the Brexit negotiations. So specifically around this currency pair, we've seen the exchange rate trade between a range of like the early 128s up to the early 132s, and this is all down to the positivity around the Brexit talks. So finally this weekend we've had some great news, and the EU has finally approved the terms for the UK's exit from the European Union. Not only have they approved the initial terms, but they've also approved the declaration for the future relationships, and this includes key areas such as the trade agreement. So when Theresa May was negotiating at the summit, it's quite well known that she feels that this Brexit agreement is the only deal possible. This is the best one for us. This got approved, which is great, but it also means that there are still a few stumbling blocks. So we have areas such as Parliament and getting this agreement through the House of Commons, which are really weighing down on sterling and limiting any potential gains. I personally think that if Theresa May is very successful in getting this through the House of Commons, we could see some really great upside for sterling. Alternatively, if she can get this through the House of Commons, but only by a very minor number of votes, we could still see some gains on sterling, because I think there is the potential for the agreement to still get through the House of Commons. So the main talking points for the European single currency last week was again around the debt situation in Italy. The Deputy Prime Minister has been talking about the European Commission parliamentary elections in May, and he thinks that this could potentially be positive for Italy, because he thinks that there is the potential for change within the EU. Currently, the EU feel very differently, and there's talk of them progressing with some disciplinary action towards Italy. This could be in the shape of some fines if they do not set their budget to agree to the EU strict rules and regulations. So there's little out on the greenback last week. I mean, on the US dollar front, we did have some comments from the Federal Reserve, which they were speaking about the strength of the US economy. They were positive, but they did hold back. You got the feeling that they were trying not to really oversell the state of the US economy. So growth is looking good. There is certainly the potential for more interest rate hikes in the future. But I mean, something that's been weighing on the US and China for a little while has been the trade agreements. Trump is due to meet with the president of China at the back end of this week, and hopefully we'll see some positive outcome from this, and hopefully the market will react accordingly. So the main focus points for the week ahead will be the assessment of our Brexit deal and any news relating to that. It's initially believed that we've got until the 12th of December to get this through the House of Commons, so that's certainly something to keep an eye out for. We also have the Bank of England stress tests coming up. That's pretty much it from the UK. On the US front, we've got the preliminary gross domestic product figure, and we also have the Federal Open Market Committee meeting minutes, all of which are both pretty key. For the European single currency, we have no key announcements. So thank you very much for joining us for this week's Rational Thinking. As ever, if you have any questions, please don't hesitate to contact us, and I look forward to seeing lots of you next week.